Welcome back to Business Lingo Demystified. In today's episode, we're going to unravel some essential terms that are crucial for understanding the ins and outs of the business world. I'm your business quest partner. Let's kick things off with our first term, gross margin. It's a term often thrown around in financial discussions. But what does it really mean? Gross margin is like the profit a company makes from selling its products or services, but before subtracting all the other expenses like rent and salaries. It's a measure of how efficiently a company is turning its sales into profit. Can you give us an example to better understand? Of course. Imagine you have a lemonade stand. Each glass of lemonade costs you 50 cents to make, including the lemons, sugar, and cups. If you sell each glass for $2, your gross margin per glass is $1.50. This means for every glass of lemonade you sell, you're making $1.50 in profit before considering other expenses. So the gross margin tells us how much money is left over from sales to cover other costs and hopefully make a profit? Exactly. The higher the gross margin, the better, as it indicates the company is efficiently turning its sales into profit. Our next term is a bit more complex. EBITDA. What exactly does that stand for and why is it important? EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's like looking at how much money a company is making from its main operations before considering certain expenses like interest on loans, taxes, and the wear and tear on its assets. Can you break it down with an example? Sure thing. Let's say you own a bakery. EBITDA would be like looking at how much money you're making from selling your baked goods before deducting expenses like the interest on loans you might have taken out to buy equipment, taxes, and the gradual wear and tear on your ovens and mixers. I see. So, EBITDA gives us a clearer picture of how well the company's core business is doing without getting tangled up in all the financial details? Precisely. It helps investors assess the company's operational performance and compare it with others in the same industry more easily. Well, that wraps up another enlightening episode of Business Lingo Demystified. And thank you to our listeners for tuning in. We hope you found today's discussion helpful in demystifying these important business terms. Join us next time as we continue our journey through the world of business lingo. Until then, take care.